The pure crash from $80,000 all the way down to 75,000 in only 4 hours was the biggest crash since 2022. So Bitcoin crash today was 100% technical, not fundamental. A lot of people were thinking or speculating that it was an options expiration at the last day, which was not the case. Usually this is what happens, and the biggest manipulation is very close to expiration date on the options. The cost basis of MicroStrategy, which in fact a lot of people also got spooked thinking that MicroStrategy might get liquidated or potentially margin called. They're in big misunderstanding simply because the MicroStrategy didn't use foreign funds to purchase the Bitcoin. Instead, they issue convertible notes, which are directly purchased from the investors of MicroStrategy stock. So this is not a problem. They will not get margin called, and this is simply not a problem anymore. This is not the price action of 2022, where they didn't have this option and they fairly had a price action where they could get liquidated. Let's move to the technical reasons of this particular sell-off. First of all, in the history of Bitcoin, the most recent history for the last 5 to 6 years after the consolidation well above 35,000, we haven't had a single trading session where we had such a big drop, and this drop was widespread without any particular reason. Usually this will happen for changes in the political environment, something that the Federal Reserve or the Banking Committee will impose restrictions. Second reason for this particular sell-off usually happens when the government or big industrial company is moving money from one wallet to the exchange, so everyone is speculating that they're going to dump, they're going to sell. Third big reason usually is that when some country around the world is actually banning crypto holding or trading, something that happened with China when China banned crypto and Bitcoin, there was actually a major sell-off. None of these things happened today. This is why we're saying that this is 100% technical breakout, and this is the reason for major liquidations of the long leverage positions. Look at this. First of all, the first broke through the support of $80,000 was when we reached a new highs of long perpetual futures on the Bitcoin. They were targeted by the short sellers, which effectively took 4 hours to drive the price of 80,000 all the way down briefly to 75,000, and then had a very sharp reversal back to 77,000, which meant that there is a lot of buy orders, limit buy orders placed at this level. There is a supply zone and there is a demand zones. On this particular zone, we saw that there were placed a lot of limit buy orders. So when this particular price hit, a lot of these orders got filled. This is why the reversal was sharp. Second important element is that you need to understand the RSI. The RSI dropped to oversold in extremely fast pace. We're talking about below 30, which if you day trade stocks, it usually happens. If you day trade crypto, usually happens, but this is not usually happening in the span of 4 hours in Bitcoin, right? This is not usually happens without any news on the weekend. If there is a news like over the week that something is changing, some new proposition, legislation, or like we said, some geopolitical condition is met, then yes, it's possible. But we're talking about over the weekend with very slim volume. The slim volume is the best conditions for short sellers to liquidate the long ones, because they don't have another power that will rebalance the short positions. Meaning, if they're $100 million worth of volume, if 80 million of those volume are essentially shorting the market, the remaining 20 million worth of volume will not be able to sustain the levels, and this is what actually happened. Bitcoin broke 4 different levels of support, and this is why we saw the 75 was kind of a consolidated, I would say, area where most of the institutional investors agreed that there is a good opportunity for buying the dip. Also, second indicator, the 50-day moving average, which indicates that $89,644 was the level that Bitcoin should break above if we want to see Bitcoin going back to 100,000. It failed to do so. Then Bitcoin tried to retest the 200-week medium average, which was around the 75,000, and this was the matching the same level of all the institutional buy limit orders that actually met at this very level. You need to understand, this was a liquidation after liquidation after liquidation. This was cascaded liquidation, or if we speak about technical terms, which meant that this was not a single event, single institution or government or trading account executing upon. No, this was a controlled cascade liquidations based on multiple different levels. It almost felt like somebody is placing $10 million shorting Bitcoin at 80,000, $10 million at 88,000, $10 million at 78,000. So all the way down, when each of these levels were met, they trigger even lower level and break through the previous level of support. This is why we saw the technical liquidation, and this is why we saw that Bitcoin finally actually retested the 200-day medium average, moving average, which is something that a lot of people, were speculating. Even the most bearish one were talking about it, but they were not expecting to see something like this. Third most important concept that without it, none of this could have happened was the volume. So we had a very low volume wise. On the long side, we have a very sharp and heavy volume concentrated at the levels way under 80,000. 70% of the volume spike was actual when the actual drop happened at 75. So when Bitcoin hit 75,000, out of nowhere, 70% of the volume converted from being bearish to bullish, which we could speculate that a lot of these institutional investors who were placing and who were crashing and controlling this cascaded manipulation on the way down were actually riding the wave on the way up at the base price of 75,000, because then the volume wise was rebalanced, which meant that from bearish to bullish, the ratio changed. From 80 to 20, ratio changed to 30 bearish, 70 bullish. If you follow the level 2, you will be able to understand how the whole graph of the volume converted and changed. This is why we saw that the Bitcoin didn't actually fall under 75,000. Again, this is weekend, slim volumes. We're closing the month, and again, this was kind of a perfect storm considering the widespread liquidations on the precious metals market. This was a perfect setup for the bears. But again, if you're long on crypto, this is an opportunity. If you're long on the stock market, every dip in such size could be an opportunity, right? The idea here is that you should never over leverage yourself.